Okay, the first question is, the price of a stock is determined by A, a vote by all the shareholders of the stock, B, the US Secretary of the Treasury, C, the people who want to buy and sell it, or D, the president of a company. And if you have to answer, paste it in, print it in the chat. Type it in the chat. Amy, do you have a question? Oh, wait. Uh-oh. Okay. I need some paper though. Okay. I'm gonna write this down. Okay. So, and third place is Aurora, and second place is Oliver, and first place is Chloe, okay, for this question. Well, in first place is Chloe, and second place is Oliver, and in third place is Aurora. So the correct answer is C, the people who want to buy and sell it. Of course, this question is kind of like relatively easy compared to some other questions, because I'm trying to do this in increments. Like the first question is like the easiest, and this last question is supposed to be the hardest. Okay, so the second question. The price of a stock may change when there are big changes in okay. Okay. So first place was for this one was Chloe too. Oliver was second place, and third place was Evan. Okay. So the correct answer is D, all of the above. Because all of these, like the weather, certain laws, and styles and fashions can make the price of a stock change. Because if anyone has any questions, they can ask them. But the weather can make some companies, they might make, I don't know, umbrellas, okay? And if there's a lot of rainy weather for the past few months, then umbrellas might be really popular or something. And certain laws can restrict companies making stuff, or using some services. Styles and fashions can well, that's all kind of obvious, but anyways. So question number 3, Wall Street is an expression. Wall Street is A, an expression that includes all buying and selling of stock. B, a place you go to buy stocks. D, I see a wall where a large billboard shows the price of every stock. Or D, all of the above. Okay. Okay, the answer is actually A, an expression that includes all buying and selling of stock. So sorry to have. Also, Damien, could you please not spam the chat? You sent me 20 text messages, okay? Anyways, the correct answer is A, an expression that includes all buying and selling of stock. And so, yeah, Wall Street, can be a place you go to buy stocks, but it's not always when people say that, they're not always mean that. And the wall where a large billboard shows the price of every stock, no. Also, Okay, so the first person was Chloe. The second person, we're trying to update this. So as I said before, the first person was Chloe, who answered it. First person was Chloe. The second person, I think, was the second person was Livia, and the third person was Aurora. Okay. Question number 4. A company's published reports may tell you A, if they are being sued by anyone, B, their sales and costs for the past 5 years, C, the names of everyone on the board of directors, D, all of the above. Okay, so the answer is D, all of the above. So the first person was Oliver, the second person was Evan, and the third was Max. Question number 5. And Question number 5. Companies are required to invite every shareholder to a meeting. A, tell the shareholders how much they are paying top executives of the company. C, report any possible good or bad news that might affect the company. Or D, all of the above. Okay. The answer, okay, this might be kind of surprising, okay? But the correct answer is D, all of the above. These are actually all correct. So Chloe was the first one, Oliver was second, and Aurora was third. And this is the final question. When you buy an odd lot of stock, you are buying a. Okay, I'm just not gonna like say this. Okay. So actually, wait on. The correct answer is, oh, I didn't type it here, but the correct answer is actually A. A number of shares that is not an even 100. You can actually go to the book and search this up. So the first person was Oliver, second was Aurora, and third was Chloe. So I'll just wait. Okay. So first place today was Chloe with 13 points. Second place was Oliver with 12 points. So you two were like really close together. And third place was Aurora with 7 points. So I'll paste these in Google Classroom. I'll write it down.
Wait, we're done?
Yeah. Next meeting I'll also do a game show. So whoever like have, because like this is the first time, right? Some people might not be like, some people might be new to this, or like they just might not like know a few of these questions, or their Wi-Fi just might be really bad. Um, um, but like next time I'll also do a game show with some questions. So be sure, like if you want to get into the top 3, be sure to like maybe read the book a little more. But good job to everybody, Like there were a lot of people who had correct answers, and even if the answer isn't like correct, you still tried, right? Because a lot of people tried. So good job to everyone, and thanks for playing. So now let's move on to the chapter 7 to 8 questions. Because most of these questions were from chapter 6. So I just didn't really like do chapter 6 questions. But question number 1. In newscasts about the stock market, what does 1 point represent? Oh, and you guys you guys can, Isabella?
Like,
Also, if you have the answer, you don't need to paste it in the chat. What?
yeah,
Sorry,
okay. It means like going up $1, like the
Yeah.
stock.
Oh, great, Isabella. I mean, like, this question might not be the most important, but it's a detail in case you want to understand like newscasts. So question number 2. After reading the story of Microsoft, what did you learn? Chloe?
So like I learned that like on stocks, you don't want to hold it like in really short term because like, and you want to have good timing. So like, when you want to sell the stock, I think for the second one, for the first one because like you can earn a lot of money in Microsoft. Like at the end, you could have like earned like millions of dollars. So yeah, and timing's also important because if you don't have right timing, you might sell it too early or maybe sometimes too late. And sometimes if you miss like a couple of days, it can make a big difference.
Yeah, that's really good. So keep in mind that this is an open question. So like, I mean, unless you didn't read the story of Microsoft, everybody should have like a few answers, and there's no right or wrong answers. Although like when I ask this question, I mean like specifically, like not specifically, like you know what I mean. Okay. So does anyone else want to answer? Does anyone wait? Has anybody read the story of Microsoft? Okay. Max?
I didn't read, like, was it on the book? I didn't read it, but I do know that Microsoft was actually made by 2 people, and then one of the other persons left. And I think I might have saw it in the book. I think it was talking about how Microsoft suddenly like grew.
Yeah.
Yeah. So yeah, as Cody said, it's really about time, and most of the time it's like you might be like, oh, I'm gonna invest in this really popular stock right now. But sometimes if you're really doing the investment, you might be like, oh, this company might be able to grow in the future. So yeah.
Mm-hmm. Yeah, that's okay, interesting. Although when I mean the story of Microsoft, I mean like in the book. Um, but yeah, Livia?
I learned that big things can happen in a little bit of time. Like something can suddenly go up and then the next day it can be even lower than where it was. And another thing that I learned is that, so like in the beginning, before it was like really high, it had to be low, right? And that to me was like, you got to keep up with what's happening in society. Like, don't invest in something that's from, I don't know, the 1950s, because that's probably not going to grow on anything.
Yeah, great. So basically, I'll just summarize the story, okay? Because maybe some people didn't really read it. And, you know, a lot of people don't remember it, okay? Because, like, unless you read it specifically, like, sometimes you don't really remember, like, some details, right? So the story of Microsoft is, like, at the beginning, when Microsoft sold for, like, a really low price, I think, like, maybe, like, if you bought 100 shares, it would only be like around $1,000, I think. But Microsoft, it's like a pretty high risk stock back then. So it grew like within years to like, if you bought a stock with $1,000, you would have like maybe like a few million, like $10 million. Of course, Microsoft was also really high risk, right? So it would like dip down. Like at one point, it was like you only had like a like maybe 7 million or 8 million or something. So like it went up and down like a lot, and it was like really risky, but at the same time, it also gave you like a lot of high returns, right? Like if you bought stock from the beginning. So personally, also you can like read this story online. Yeah. So personally, when I read the story, I thought like, because if you bought Microsoft and you'd like witnessed those really big ups and downs, then you probably would have sold the stock at this really low point because it was like losing so much money and you thought like it would lose more, but you were wrong or something, or you panicked. So these kind of really high risk stocks, they have really high returns, but it's also really risky. And many people, they can't hold the stock long enough and they sell it like at a really low point, or like they sell it in the beginning. Yeah. Also, yeah. So question number 3, the COVID-19 virus had a huge impact on the US economy and stock market. So what type of stocks do you think were negatively impacted by COVID? Okay, I'll just ask one question first, okay? So if you have answers to both, just answer the first question. Max?
Yeah. So so I think like mostly like the ones that most affected were probably consumer products, because at that point everybody was like locked down, so people weren't really going anywhere. They weren't like using a lot of consumer products, especially like if that consumer like company didn't have a lot of online base. And also, and some things that definitely could have benefited from COVID are technology. Yeah, at that time everybody was researching some things medical, because everybody was getting sick. There was a lot of things about health, face masks. So yeah.
Okay, yeah, that's great. Those are like really interesting points. I'll show a few examples later on. But let's give like a few other chances for other people to answer. Also, if you have an answer, just answer one point, please. Thank you. So Isabella,
Like I feel like some stocks that were negatively impacted probably be like AMC Entertainment, because sometimes the theater chains like during COVID, they closed for a long time and they just didn't earn any money. Also, like mall stocks, like not a lot of people went to the mall during COVID, so they probably also went down.
yeah. Yeah, that's like those are really good points too. That's great. Chloe,
I think well, maybe this is just a small impact, but like fast food maybe, because people don't want to go outside. So fast foods might like be impact. Well, I mean, maybe not, because they could use DoorDash, but like maybe the sales were down from when it wasn't in COVID.
yeah, that's excellent. So Livia, you also have another answer.
Yeah, so I think a stock that might have been benefited from COVID was toilet paper, because you know how everyone was like rushing to buy it and there were like a ton of sales. Like that could have been positively impactful for the companies that sell toilet paper.
Oh yeah, I'm gonna include an example about that later.
And also vaccination companies, because everyone was trying to get a vaccination because they were like so scared of COVID.
Mm-hmm. Yeah. Evan?
I think companies that will benefit from COVID will be like pet companies and like online communication companies because of like Zoom and things like that.
Mm-hmm. Yeah. So wait, so for the first question, a lot of transportation consumer discretionary stuff like consumer discretionary companies are like companies that manufacture things you don't actually need. Those like negatively impacted as well as like as some people said, the malls, hotels, movie theaters, those companies who own those those like places, I guess, because many people they won't really want to like go on vacation in COVID, right? Um, um, so like a lot of like consumer discretionary stuff like McDonald's or Starbucks, those stocks went down because nobody wanted to actually go to McDonald's like Starbucks in the middle of this new like this like new epidemic or something. Some types of stocks that benefited from COVID were like healthcare stocks, as some people said, companies that made vaccines, consumer staples. These were stuff. These like these were companies that like made necessities, like stuff that people needed or like really, really, really wanted or stuff like Walmart, for example, sells consumer staples and basically is considered consumer staples stock. Like it's considered in the consumer staples sector. Walmart actually had a 45% increase during the first year of COVID. Okay, you might not expect that, but you know, during the first year of COVID, people were like rushing to buy things like toilet paper, like food, like etc. etc. Um, so a lot of people were rushing to buy these things. Amazon had like an even greater increase. Amazon had a 220% increase during like COVID. Because you know it's an online store or something, right? Basically. So a lot of people bought from Amazon because it was online and you didn't actually have to go there to store or anything. It would be delivered to your house. So now let's move on to our case study today. It's about margin. Okay, so let's say you have $1,000, okay? And then you hear about this thing called margin, and it sounds really great. So how margin works is that you borrow some money, like for example, $2,000 from your broker. Then you buy, for example, a stock like Tesla for $3,000 for $200 a share. So if Tesla makes money, like maybe your $3,000 of Tesla is now worth 4,000. So then you can sell the stock for $4,000, pay off your debt, which you remember is 2,000, right? And so now you're left with $2,000. And then, because like you originally had $1,000, right? So you make $1,000 and your money basically like doubles. It's like win-win, you know? You make money, like your money doubles, your broker makes money. But what if Tesla loses money? So like what if the price of one share turns from $200 to $180? Of course, okay, I already wrote how much money you lost. But if the price of one share turns from $200 to $180, then you have 15 shares totally, right? So then you lose 15 times 200 minus 180, which is $300. And you originally had $1,000, right? So you lose like 30% of your original money. And that sucks for you. I'm sorry, especially if you have like way more than $1,000 in the market. Oh, okay. So now let's say the stock price of Tesla decreases to $130 a share. Like maybe Tesla has bad publicity, or maybe like another Tesla car blew up again, killing 15 people. Anyways, so like if the stock price of Tesla decreases to $130 a share, you lose 15 times 200 minus $130, which equals $1,050. You lose $1,050. Okay, so basically your investment is now worth $1,950. And you remember that you owe your broker $2,000, right? Then you can't even pay your broker back the $2,000 because you only have $1,950 in the stock market right now. So you basically lose all your original money and you owe your broker $50 more. And remember, if you didn't buy things on margin, then you probably wouldn't have lost that much money on Tesla, right? You may have lost a lot, but not that much. So you lose all of your original money and you owe your broker $50 more. Okay, so I'm just gonna like wait a few seconds for you to like look at this slide. Okay, so what did you learn from this? Oh, and by the way, do you guys have any questions about this? Wait, why do I hear an echo? Can you guys hear an echo? Okay, never mind. Okay. Okay then. So what did you guys learn from this? This is an open question. Lydia.
So I learned that it's not always a good idea to borrow money to pay for things because you eventually got to pay them back and they might even want more than what they originally gave you. Because if the stock that you bought loses money, then that is not good. Like in this story, you have to owe your broker $50 more, but that's really not a lot. But let's say you borrowed more than $2,000 or $2,000 from your broker. Then that's a lot more money you have to owe. And I realized this is kind of like how things were before the Great Depression. People were borrowing money from the bank to buy stocks.
Oh yeah, I'm gonna talk about it later. But those are like great points. So let's see, Chloe, do you have like some other points?
I learned the stock market is really can be volatile, can be like unpredictable sometimes. Like so sometimes you can earn money and sometimes you can lose money. And as Olivia said, like sometimes it's not a good idea to borrow money from a broker unless you have done the research and you're really doing high risk. But if you're like amateur in the stock market and like you don't have much experience, I don't think so you should, because like if you don't have a job yet, and if you like borrow your broker money and like you don't earn money, then that's just and you loan, that might just, and if it's like a really big amount, that's not good. So yeah.
Yeah, excellent. So Max? Hey, Max?
Yeah, so basically it means that it's saying that margins, it's generally a pretty risky thing because there's the chance that you could, when you earn money, you could earn more. But if you lose money, you could lose more, and you could also go into debt. And like in this case, it's like not bad because you're only $50 in debt. You just like give them $50. But like let's just say you like invest in 1 million. Well, like then it's a very big problem because now you're in a lot of debt.
Yeah. So basically, that's what happened in the Great Depression. Like that's what caused the Great Depression. So in the 1920s, margin was like just invented, like not invented. Margin was like just beginning to like appear, and like it was like this new idea. And so with margin, you can buy a lot of stocks. Well, if you don't even if you don't have the money to, or like even if you don't even have half of the money to. So more people bought stocks and stock prices just went up, which made even more people buy stocks on margin, which made the stock prices go up and up and up. So it was like a cycle.
I have a
And
question.
yeah.
How's your investment now worth 1,950? You lost 1,050. Like, how is it worth 1,950?
Oh, so that was typo. Sorry, that was just a typo. But yeah, but no. Yeah, it's $3,000, right? Because look, you originally had $3,000, right? Then since it decreases to $130 a share, you lose $1,050. So now your investment is now worth $1,950. Wait, do you mean this like this equation? Basically, you
The
have
equation is fine. It's fine. Okay, I understand what you mean.
wait, what do you mean?
I was confused. How do you got 1,950?
Basically, since look, if you have $200, okay, in the stock market, and it decreases to $130 a share, so now your investment is now worth $130 a share. Here we're calculating how much money like you lost, because one share is like $200, right? So it goes from 200 to 130, which is like $70 you lose. But you bought 15 shares, so it's 15 times 70, which is 1,050. I'm assuming I'm correct, right? So basically, you lost $1,050. That's $3,000 minus $1,050, which is $1,950. Wait, tell me where I didn't go correct. Did I do this correctly? I'm pretty sure I did this correctly, right?
Yeah, you did it correctly. I think she thought that we started with $1,000.
No, I started with I have $1,000, but I borrowed $2,000. So
I
that's
feel
$3,000.
or they thought that you had $1,000. You ended up with 1,950. So they thought it was a typo. So it's actually
No.
3,000.
Yeah, because I said you buy Tesla with $3,000, right? For $200 a share. That's 3,000 divided by 200 equals $15. 15. So you have 15 shares of $200 of Tesla. Okay. So, okay, but I mean that was great because you thought I was making a mistake. So that's great you tried to point it out. But can I continue now? Okay. So basically that's what happened in the Great Depression. And then where was I? Okay. So I was like, in the 1920s, a lot of people they didn't know much about the stock market. So they basically they thought the stock market was very stable. And one day, the stock prices just went down a little and people panicked, okay? So they sold all the stocks because they were on margin, right? And they sold off the stocks, which made the stock prices go even lower and lower and lower, and more people sold it. And within one day, I think it was down like a few maybe tens of percentages. Like it was down a lot within one day. And a lot of people lost all of their money and owed people even more money, and it was just like a big mess. Of course, so I wouldn't really recommend you like invest in margin unless like unless it's supposed to be like for fun or like a little bit of gambling, or unless you're like a really high risk taker and you really want to invest in margin. Even then, don't invest that much in margin because it's really risky. Okay, so does anyone have any more questions about this? Okay. Also, could you guys like lower your hands? So let's move on to chapter 9 to 10 questions. So question number 1, what is the meaning of PE? Oh, wait, no. Oh, I already said this. Never mind. Well, like in the lecture before. Yeah, Chloe? Oh, this question doesn't even matter. You know what? Just
PE means price
I-
over.
Okay, you know what? Since I already said this, I'm just gonna skip to question number 2. What is the meaning of 52-week high and low?
Do I answer that
Olivia?
question?
Okay, hold on.
Oh, can I answer?
Wait, who said who answered? You know what, Chloe, just answer the question.
52-week high and low is in this 52 weeks. What is the highest the stock got into, and what is the lowest the stock in the 52 weeks?
When I said like, I mean like, what's the meaning of 52-week high and 52-week low? So basically, like, these are just like some like indicators and stuff, like measurement stuff. Like if you're researching a stock, you might like you might find. So 52-week high and low basically means like in like 52 weeks, the highest price and the lowest price of a stock. So question number 3, what does GDP stand for? And how does, you know what, just what does GDP stand for? Does anyone know?
I think something growth.
Can I
And
answer? I know. Well, if he doesn't know.
It's growth, and then the DMP I forgot. But and
Gross
how it,
domestic product.
and then how it works is it bases on all like consumer purchases in actually not purchases but any economic activity within a country, and it'll calculate it, and then it'll rate it like in GDP, which is what it is. However, yeah.
Yeah, it's basically like, I think it stands for gross domestic product, right? Yeah. So it works like, it's like the total value of all the services produced in the country. Like it's like a way to measure the growth or decline of the economy. So I think America right now has like 2.4 GDP. I think China has like 6 or something. But anyways, so it's just like this, it's like this really effective way to measure the growth or decline of the economy. And here's the question number 4. When you buy a stock, what are some factors you would personally consider? And here's some like, it's like kind of like an open question. And also, if you have the answer, could you please raise your hand like digitally? And when you answer the question, could you please like lower your hand? Okay. Wait, Chloe, do you have an answer to the question, or or did you just forget to like lower your hand?
I can answer. Okay. I have like, I can answer the question. Well,
Oh. Okay.
So, some factors maybe like, I look at the ROI, return on investment. I think I do look at the ROE, return on the equity. I'll look at the current ratio, and the SMA. and not really FCF, but like maybe I should, but like, and I should look at the EPS. I don't think I really look at it, but I would, those are some factors I would like. I think I should. Maybe some other factors like 52-week high and low, and PEPS and PP, and yeah.
Mhm. Yeah. Um. Yeah, that's really good, Chloe. So, Livia.
So things that I would personally consider are the price, because I'm not gonna buy it if it's like $1 million. That's way too expensive. And another thing I would do is compare it to other stocks that are similar and see which one is the best and would probably make me the most. And another thing is trends. Like for Apple, they come out with a new phone about every year. So I would think about a good time to buy stocks and sell them. And those are the things I usually consider.
Mhm. Yeah, excellent, Livia. Max.
When I buy a stock, I generally I mean price isn't that much, because in Fidelity you can buy like 0.00001, or like as small of a price as you want. So that's not really like what I don't really care about the price, but what I care about is like how reliable it is, how reliable is the stock, like go. I'm not the person who's like, oh, I need to have it make a lot of money, but I don't like it just losing money. So I just try to look like, oh well, right now, like this energy is doing well. Well, then I'll buy this energy set for money. So that
Yeah, those are great points. Kai.
I would look at the company's products and like maybe look at some newer companies and look at their products and maybe consider if they'll go big or not.
Yeah, that's great. So there's a lot of factors you would personally like. There's a lot of factors you can consider, like as I talked about like EPS or PE. You could like consider sometimes. There's also a lot of other factors like the stock's volatility. Some um like I think I said before in some meetings before, like PBPS, you could like you have to like consider like if the company, if it's like unique or not in its field. Like if there's a lot of companies in let's say the healthcare sector, okay, and they're all like competing against one another, and nobody really has a lot of like high returns, and like those companies can be replaced, right? I wouldn't really buy a lot of stocks in those companies. I would want to buy a stock in a company that's unique, and like it's in like the interest, it's like it can be replaced, like for example, let's see, Tesla, for example. No other company makes like electric cars. Well, like, yeah, they do, but like no other company makes electric cars that are that technologically advanced, right? And no other company is that famous or anything, right? Also, I would like to see like for example, if there were any like new laws or stuff that can, or trends, like I would see if there were any trends so far, and like if the stock is stable or not, if it has like, if it has like good high profits for a long time. There's also some technical indicators and stuff, but I won't really like talk more about that today. And yeah. Oh, by the way, Max, do you have a question? Okay. So that actually should be all for today. Yeah. So does anyone have any questions about this? No? Okay. Well, okay. So that's it today for today. Thank you for like attending this meeting and stuff, and so see you next time.
Bye.
Bye. Okay.